Welcome to HDFC Securities 5-minute market wrap-up for the week ended 25th January 2024. Your weekly guide to all the key events in the market during the week. In key macroeconomic news, US Composite PMI Index rose to 52.3 in January 24 from 50.9 in December 23. Both the services and manufacturing PMIs rose sharply. US core PCE declined to 2.9% year-on-year in December compared to an expectation of 3% and a reading of 3.2% in November. US existing home sales slipped 1% month-on-month to the lowest level since August 2010. China cut its reserve requirement ratios for banks by 50 basis points. It will provide $139 billion in long-term liquidity to the market. China kept its key lending rates unchanged. Bank of Japan kept its policy rates unchanged in line with expectations. Nifty declined for the second week in a row, ending lower by 1% during the week. The BSE Midcap Index fell by 1.6%, whereas the heavyweight Bank Nifty Index was down by 2.7%. Among sectoral gainers, defensive sectors like pharma, power, and BSE Telecom eked out marginal gains. Among sectoral losers, Nifty Media declined by 10% after Sony terminated its agreement to merge with Zee Enterprises. Nifty Realty and Nifty Bank were also big losers. Among select market movers during the week, IFB Industries shares rose by 25% after its revenue grew by 16% year-on-year. Borosil Renewables jumped 23% after PM Modi announced the Pradhan Mantri Suryodaya Yojana, under which 1 crore households will get rooftop solar units. Shares of Zee Enterprises declined 30% after Sony called off its $10 billion merger with Zee Entertainment. Shares of Oberoi Realty fell 13.3% after the company reported a 49% year-on-year decline in its net profit. FIIs were big sellers again this week, selling rupees 12,700 crores of equities in cash, taking their month-till-date sales to rupees 35,778 crores. DIIs were big buyers again, buying about 9,000 crores of equities in cash, taking their month-till-date purchases to about 19,900 crores. US markets continued to inch higher, with both the S&P 500 and the Nasdaq Composite ending the week higher by about 1%. In this section, we discuss select reports published by the research teams of HDFC Securities. Please note that these reports can be accessed at our website. In the pharmaceutical sector, our analyst expects US generic growth to stay, but we should be selective on the structural play. Our team initiated coverage with a buy rating on Sun Pharma and Zydus Life and a reduced rating on Lupin and Dr. Reddy's. In the industrial segment, NHAI ordering has remained muted during the 9 months of FY24. Monetization, however, has gathered pace. L&T, Cummins India, Thermax and Kalpataru are our top picks in capital goods, and in the first place we like Ashoka, HG Infra and NCC. In the auto component space, we believe that the industry is in its sweet spot, aided by several tailwinds, including on the supply chain de-risking strategy by global OEMs, favorable government policies under Make in India, and India emerging as an auto hub for global OEMs. We initiate coverage on SAMIL, Sansera and Suprajit with a buy rating, and Motherson Sumi Vaz India Limited with an add rating. Oberoi Realty registered muted pre-sales of rupees 800 crores. Nevertheless, we retain a buy rating with an unchanged target price of rupees 1,533 per share. Our retail research team came out with a note of Sri Digvijay Cement. The company is looking to expand its capacity to 3 million tons per annum from the current 1.2 million tons per annum. The company's current plant is operating at more than 100% of its capacity. We have a base case fair valuation of rupees 129 per share and a bull case fair value of rupees 144.5 per share. That is all for this week. Do refer to the detailed disclaimer on your screens. Please note that the securities discussed in the presentation are for educational and information purposes only. Thank you.